After reviewing Chapter 6 notes in section number 1, it reviews the steps of the accounting cycle. We have gone over steps 1 and 2 in the last few chapters. We've analyzed transactions, and now we're going to learn how to journalize each transaction. By doing this, we're going to use the analysis process that we used previously, and we're adding in one last step to the table. After the T accounts we learned in chapters 4 and 5, we're now going to put them in general journal form. What you'll need while you work on this video is you'll need to download the Excel General Journal and the zip transactions located in Chapter 6. Now you may want to take out the chapters 4 and 5 zip transaction T accounts we did, as they're the same transactions, but I would suggest just trying to do them from this transaction sheet to give you more practice analyzing transactions. So on the right you see here a general journal. This is what it looks like, and I'm going to show you how to enter in the journal entries on the general journal. First thing we're going to do is enter in a page number, and we'll pretend we're starting our first days with zip, so we'll use page number 1. We'll use the current year, right now is 2013, so we always put that in first. Next we're going to put the month, and our zip transactions you can see take place during the month of September. So I'm going to write September, and our first transaction takes place on September 1st. Now as we enter or go through the rest of these transactions, I won't need to enter the year or the month again until they switch. For example, once we hit October, I'll enter October, and once we would hit 2014, I would enter that. Otherwise, I can just leave those there and enter in the different transaction dates. Now, how this spreadsheet is set up is column C, we're going to put the debit, column D, we're going to put the credit, and in column E, we're going to put the description. We're going to ignore column F, the post-reference column, for this chapter and learn about that in chapter 7. Then you'll notice here we have a debit column and a credit column. Debit is on the left and credit is on the right, similar to our definitions of those. We're going to take the information from our T accounts or from over here with our transactions and fill this in. Really, there's nothing new this chapter with accounting rules. It's just formatting from T accounts to the general journal. So if we look at our first transaction, Kelly Granfield took $25,000 from personal savings and deposited that amount to open a business checking account in the name of Zip Delivery Service. So two things you'll notice here, we do have a date, which we just entered in, and we also are going to have what's called a source document after that you've learned about in the chapter notes as well. This would let us know where to go if we wanted to look to verify that this transaction occurred. So first thing we do is we are going to write in the account we debit. So we know from previously looking at these transactions that we are going to debit cash. So we're going to type in cash, and then we're going to tab over, and since we're debiting it, we're going to enter in that dollar amount. And this spreadsheet's set up already in dollars, so you don't need to use commas, dollar sign, just type in the numbers and it'll appear. Next we know we're going to credit. So we're going to tab over to column D, and we're going to credit KG Capital. We're going to tab over, and since we're crediting it, we're going to put it in the credit column. And the last thing we do, we tab over to column E, and we put that source document where we can go to find information if we need it, Memo 1. And that's it. That's as easy as journalizing a transaction is. So then we're going to start the next one. You can skip a line if you'd like to, or just continue on with the next row. So now we're at September 2nd. On September 2nd, Kelly Granfield took 2 telephones valued at $200 each, $400 total, from her home and transferred them to the business as office equipment. So it's given right there that the telephones are called office equipment. So we're going to go ahead and debit office equipment for the total, $400. And then we're going to tab over and we're going to credit again KG Capital. Okay, and if we hit tab, it'll just accept that for us since we've already written it. KG Capital, credit 400. And you want to make sure each transaction as you go that the debit amount is the same as the credit amount. That way we won't need to total anything at the end. We just know of each transaction there's a debit and credit for an equal amount. We're good to go. Next, on September 3rd, Zip issued check 101 for $3,000 to buy a computer system. So we're going to debit computer equipment, $3,000, and we're going to credit cash since it gave us the keyword that we paid with a check. Our source document, check 101. On September 4th, Zip bought a used truck on account from San Diego Auto for $12,000. So we are going to credit delivery equipment, $12,000. And we're going to credit, since we had the keyword on account, we're going to credit accounts payable, San Diego Auto. And it's okay to abbreviate to have things fit within the lines. $12,000. And here, our source document is invoice 100. On September 5th, Zip sold one phone on account to Green Company for $200. On account means they owe us, so it's going to be accounts receivable, Green Company. And they bought one phone, so we're going to debit $200. And then we're going to credit, we had categorized the phones before as office equipment, and now we're losing one. So we're going to go ahead and put office equipment in. Credit $200. And our source document is invoice 1. September 6th, Zip mailed check 102 for $350 as the first installment payment on the truck purchased from San Diego Auto. So we're going to go ahead and debit our accounts payable, San Diego Auto, because we're decreasing the amount that we owe them by $350. And we're going to credit cash as we're paying that amount with a check. Our source document, check 102. September 7th, Zip received and deposited a check for $200 from Green Company. The check is full payment for the telephone sold on account to Green Company. So here they're not buying anything else from us. They're just paying us back for the phone they bought in transaction 5. So we're going to go ahead and debit cash for the dollar amount they gave us, $200. And we're going to credit the accounts receivable because now they no longer owe us any money. And our source document is receipt 1. On September 8th, Zip provided delivery services for the Sims Corporation. A check for $1,200 was received in full payment. So it doesn't really matter who bought from us because they paid us immediately. So we're going to go ahead and debit cash because it said they paid us with a check, $1,200. And we're going to credit delivery revenue. Just be careful with Excel that it's going to put in what it thinks you want to write. Just make sure that you're accepting exactly the correct account that you want and not an incorrect one. And our source document for this is receipt 2. On September 9th, Zip mailed check 103 for $700 to pay the month's rent. So that's going to be rent expense, $700 debit. And we wrote a check, so we're going to credit cash $700. And our source document is check 103. September 10th, the Union Tribune prepared an advertisement for Zip. Zip will pay the $75 fee later. So we're going to debit advertising expense, $75, and we're going to pay them later, so it's going to be accounts payable, Union Tribune. Source document, invoice 546. On September 11th, Zip billed the San Diego Reader $1,450 for delivery services. Since we billed them, it means we haven't received the money yet, so we're going to go ahead and put accounts receivable, San Diego Reader, $1,450, and we're going to credit delivery revenue, $1,450. Source document, invoice 2. September 12th, Zip paid a $125 telephone bill with check 104. We're going to debit utilities expense, $125, and we're going to credit cash, since we wrote a check, $125, and our source document, check 104. September 13th, Zip wrote a check 105 for $600 to have the office repainted. That's going to go under maintenance expense, debit $600, and we're going to credit cash $600 with a source document, check 105. In the last transaction on September 14th, Kelly Granville wrote check 106 to withdraw $500 cash for personal use. So we're going to debit KG withdrawals account, one of our temporary capital accounts, $500, and we're going to credit cash $500 with a source document, check 106. And then we've completed our journal entries. The biggest thing to remember with journalizing entries is making sure, again, after each transaction that the dollar amounts match up. That way we're not adding anything at the end to make sure debits equal our credits. We can see that as we go. We also want to remember formatting. We want to be able to look easily at the transactions and see what was debited and what was credited. Therefore, in Excel, it's made easy because I've set up the columns to tab over. However, if you're writing it out, you would just leave a couple spaces each time as you do the credit, leave a couple spaces over again each time as you do the source document. So it would look just like this even if you're writing it out on paper. But this is what our journal looks like. If we were to go to a second page, we would put page number 2 or whatever page that is. An example of what a general journal looks like if you'd like to write them out instead of type them in Excel, you can download this general journal. Again, you can see it looks very similar, and you would just write the information. Again, putting the debits flush with this line, and when I'd put the credit, I would start it right about here, and then the source document on the third line, you'd start a little bit over as well, and either way would work. And that is Chapter 6. Journalizing transactions.